with a 200% wine tariff. How will Americans react? Can you imagine walking into a supermarket one day and realizing your favorite bottle of wine now costs 3 times as much? This is no longer a hypothetical scenario. Trump has just announced a staggering 200% tariff on wine and champagne from Europe, a decision that has sent shockwaves across the country, pushing millions of Americans into even greater financial strain as prices continue to soar. Trump sparks controversy with a 200% tariff. Look at this number, 200% tariffs on imported European wine. This isn't just a small increase, it's a massive shock to the wine industry and millions of American consumers. The decision came immediately after the European Union, EU, imposed a 50% tariff on American whiskey. In response, Trump struck back aggressively, imposing the highest ever import taxes on European wine, champagne, and alcoholic beverages. But this isn't just about a trade dispute. It directly affects a crucial voting bloc: suburban middle-class women, a demographic that played a major role in the last election. Backlash from women voters. When wine is no longer an easy choice. Think about it. Wine has long been a staple in the daily lives of millions of Americans, especially housewives, middle-class families, and business professionals. Now, with this new tariff, the price of imported wine could triple. What does this mean? A French wine bottle that used to cost $15 may now be $45 or more. Restaurants, bars, and liquor stores will face higher costs, leading to steep price hikes. Women voters, a key electoral group, are feeling the direct impact. So here's the question: will this decision cost Trump support among suburban voters? Because the reality is, these voters were instrumental in past elections. Now, they are facing price surges not only in wine, but in a wide range of products due to the ripple effects of this trade war. The economy takes a hit, the dangerous escalation of the tariff war. Trump's decision isn't just affecting wine lovers, it's having serious consequences for the U.S. economy. In the past few days, the stock market has taken a major hit. The Dow Jones dropped 350 points in a single day, wiping out 1% of its market value. NASDAQ fell by more than 1%, signaling investor panic. Economic experts warn, if the trade war escalates, the U.S. economy could face an even deeper recession. But why is the market reacting so strongly? Because businesses and investors crave stability, not uncertainty. An endless tariff war could lead to sharp increases in consumer prices, disruptions in global supply chains, difficulties for American businesses exporting goods due to retaliatory tariffs. So, will Trump adjust his strategy to prevent further economic damage? Trump refuses to back down, despite market panic. What have we seen so far? A growing trade war, a plummeting economy, and voter anxiety. Yet, Trump remains firm in his stance. When asked about the economic fallout, he declared, "We don't need their wine. They need us, not the other way around."
As a student of innovation and studying what is happening in China right now, we're astonished at what's happening from an innovation point of view. When the government here put out an objective,
yes,
the entrepreneurial zeal of the people takes over, and they
imports. American wineries cannot meet the surge in demand overnight. Domestic production costs are higher, which means U.S.-made wine prices will also increase. In other words, Americans will still pay more, whether they buy imported or domestic wine. The consequences of Trump's trade policy. How much more can Americans endure? The truth is, Trump's tariff decisions aren't new. But this time, they are hitting the wallets of millions of Americans directly. Consider this. Food prices have already surged dramatically in recent months. The cost of living is rising while wages remain stagnant. Investors are panicking, causing further stock market losses. Will this be a turning point for independent voters who are now reconsidering their stance? Don't look away, because what happens next might just shock you. Mexico, one of the U.S.'s largest trade partners and the second largest steel exporter, has chosen a slow and steady approach in its response. They didn't rush to impose retaliatory measures immediately. The Mexican government, under President Andrés Manuel López Obrador, decided to negotiate and seek a peaceful solution. But at the same time, they didn't rule out the possibility of imposing tariffs on U.S. goods if necessary. However, Mexico isn't just facing the impact of U.S. tariffs, but also dealing with a decline in exports and the escalating trade tensions that could greatly affect its economy. Analysts forecast that Mexico's steel industry will need to reduce output, while the agricultural sector will face significant challenges, dealing with higher tariffs on products like tomatoes and avocados. The situation in Brazil is not much different. As the second largest steel exporter to the U.S., Brazil is trying to find a way to respond to this decision. Brazil's finance minister, Fernando Haddad, criticized the U.S. tariffs as unreasonable and wrong, and declared that they would seek legal measures at the World Trade Organization, WTO. However, like Mexico, Brazil has decided not to rush into retaliation, but instead will patiently pursue negotiation options to avoid escalating tensions. Tariff retaliations not only affect the partner countries, but also have a significant impact on U.S. businesses. The steel industry will be one of the most affected sectors, as the new tariffs will raise the cost of imported steel, increasing production costs in U.S. factories. This not only drives up product prices, but also diminishes the competitiveness of U.S. products in the international market. The EU has shown strength in this decision and has not hesitated to respond forcefully.
The objective is to counterbalance the increased trade value affected by the US tariffs while minimizing the impact on European businesses and consumers. But the disruption caused by tariffs is avoidable if the US administration accepts our...
However, the issue is not just about the tariffs, but also the political relationship. EU countries have agreed that the US tariff policy not only has a negative impact on the global economy, but also disrupts stability in international trade relations. Stay tuned, because the twists and turns could impact you. For decades, the US has dominated Canada's economy, with over 73% of Canada's exports flowing south. But for the first time in history, Canada is saying enough. Mark Carney, the new Prime Minister of Canada, has made it crystal clear: Canada will never be part of America. Is this the beginning of a full-scale trade war between the US and its closest ally? The details coming up will shock you, so stay tuned. Mark Carney is not your typical politician. He's a world-class economist who steered Canada through the 2008 financial crisis as the governor of the Bank of Canada. Then, from 2013 to 2020, he led the Bank of England, helping the UK survive Brexit's economic chaos. Now, as Canada's Prime Minister, Carney is making his stance clear. Canada must break free from US economic control. Unlike his predecessors, Carney doesn't play politics. He plays with data, strategy, and hard facts. And that makes him a serious problem for Washington. In response to Trump's brutal 25% tariffs on Canadian steel, lumber, and auto parts, Carney is striking back. Instead of backing down, Canada is launching its own countermeasures, massive tariffs on U.S. goods, hitting key American industries, expanding trade with the EU and BRICS nations. To reduce reliance on the U.S., boosting domestic production, to replace U.S. imports, investing heavily in renewable energy to challenge U.S. oil dominance. If Canada succeeds, the U.S. will lose one of its most critical trade partners. And if other countries follow Canada's lead, this could trigger a major shift in the global economy. But Carney's fight isn't just about trade. He wants to change the entire global financial system. Back in 2019, at the Jackson Hole Economic Summit, Carney warned that the world was too dependent on the US dollar. He argued that countries shouldn't be at the mercy of the Federal Reserve's decisions, which impact inflation, interest rates, and markets worldwide. His solution? A new global currency system that reduces reliance on the US dollar. A central bank-backed digital currency that could replace the dollar in international trade. If Carney succeeds, the US could lose its biggest economic advantage, the power of the dollar, and that would change everything. The trade war between Mark Carney and Donald Trump is heating up, and it could change the future of North America's economy. Trump has hit Canada with heavy tariffs on steel, lumber, and agricultural products, aiming to pressure Canada into economic submission. But Prime Minister Mark Carney isn't backing down. He's expanding trade partnerships with the EU, BRICS, and other global markets to reduce dependence on the US. Carney is also pushing for less reliance on the US dollar, calling for a new financial system where countries aren't at the mercy of American monetary policy. This move has Washington on high alert, with Trump and his allies viewing it as a direct threat to US dominance. While Trump uses aggressive tariffs and economic leverage, Carney is playing the long game, building financial alliances to protect Canada from US influence. If he succeeds, other nations may follow, potentially weakening America's global power. Markets are already reacting. With investors worried about prolonged economic instability, this isn't just about trade. It's a battle for control over North America's economic future. With neither side willing to back down, is the U.S. about to lose its strongest trading partner? Donald Trump is unpredictable, aggressive, and unapologetic. He's willing to burn bridges to get what he wants. Mark Carney, on the other hand, is strategic, calculated, and data-driven. He won't back down easily, and he's preparing Canada for a fight like never before. This battle isn't just about tariffs and exports. It's about the future of North America's economy. If Carney breaks free from U.S. economic dominance, other countries might follow his lead. So the real question is, can Trump stop Canada from walking away? Or is the U.S. about to lose its most loyal trading partner? The U.S. stock market is plummeting, with the Dow Jones dropping 850 points and the Nasdaq down 3.1%. Trump's tariff policies face heavy criticism. Even the stock market took a nosedive. Donald Trump appeared in an interview, proudly boasting about his latest purchase, a brand new Tesla. "I'll have it at the White House. I'll let my staff use it. I love driving, but I'm not allowed to." While Trump was excited about his car, the U.S. economy was facing serious instability. The Dow Jones dropped more than 850 points, marking one of the worst trading sessions of 2025. The S&P 500 fell by 2.3%, affecting millions of Americans' retirement accounts and investments. The 10-year U.S. Treasury bond yield rose to 4.9%, signaling growing recession fears. As billions of dollars vanished from the stock market, Trump remained focused on his personal luxury. Trump continued to defend his tariff policies, claiming they would bring jobs back to America. But the market reacted differently. The Nasdaq fell by 3.1%, with tech stocks taking a massive hit due to rising import costs. Major companies like Apple and Tesla saw their stock values drop by 5.6% and 4.8%, respectively, as concerns over supply chain costs escalated. Retail giant Walmart warned the tariffs would lead to price hikes, directly impacting American consumers. Even Fox News couldn't ignore the damage. One of its reporters bluntly stated, "These policies are throwing the market into chaos and putting the U.S. at risk of a recession." At a White House press conference, Trump's spokeswoman, Karoline Leavitt, tried to defend the tariffs, claiming tariffs are not a tax increase. They are actually a tax cut for the American people. Immediately, a Fox News reporter fired back, "Have you ever paid a tariff?" Because they don't hit foreign countries. They hit American businesses and consumers. According to a report from the American Enterprise Institute, AEI, 98% of U.S. tariffs on China are actually paid by American businesses and consumers. Import prices have risen by 17% since Trump's latest tariffs were enacted. Core inflation in the U.S. has increased by 5.2% year over year, partly due to tariff-related costs. Unable to counter these facts, Leavitt hesitated and responded awkwardly, "I think you're insulting my economic knowledge." Even Fox News, long known for its unwavering support of Trump, was no longer buying his administration's economic rhetoric. After the market's sharp decline, some Fox News commentators began publicly criticizing Trump's economic policies. Fox's senior correspondent, Peter Doocy, remarked, "Even Trump's closest allies disagree with his tariff strategy. We're witnessing a market shock caused by the instability of his administration." Meanwhile, data from the Federal Reserve, Fed, revealed the likelihood of a U.S. recession in 2025 has risen to 65%, fueled by trade policy uncertainty. Unemployment has climbed to 4.6%, with many small businesses starting to cut jobs. Consumer confidence has dropped to its lowest level in 18 months, as Americans worry about their financial future. Investors continued selling off stocks, fearing a deepening economic crisis. But when pressed on these concerns, Trump dismissed them vaguely. "We're in a transition period. It will take some time." His unclear response failed to calm the markets and did little to restore his credibility among voters in the financial sector. Fox News, once one of Trump's strongest media allies, could no longer defend him. Donald Trump walked into the press conference with the Prime Minister of Ireland, like a rundown machine, making shocking statements while the stock market plunges. Is he self-destructing the U.S. economy? When the stock market drops sharply, the US economy has plunged into crisis. The S&P 500 dropped 9%, the Dow Jones lost 7%, and Nasdaq fell by 10%. The stock market is drowning in red, and what keeps Trump going? His trade war policies. Especially since these wars are not just affecting China, but also impacting close allies like Ireland and NATO. Economists warn that if Trump doesn't change course, the US will face a severe recession. First, Trump proudly claims that NATO has become wealthier thanks to the contributions of member states under his pressure.
He said, "I've never seen anything like it. Money came in by the billions and billions and billions of dollars, and NATO became much stronger. Now, NATO's expended a lot of that money in fighting this horrible war. It's too bad they had to do that."
But the important question he refuses to answer is, does the US have a future in NATO? Instead of strengthening this relationship, Trump continues to create tension, isolating the US more than ever. Could this decision lead to irreversible consequences for both the economy and national security? Not stopping at NATO, Trump also criticizes Ireland, accusing the country of exploiting the US.
The EU was set up in order to take advantage of the United States.
Including Ireland? Is Ireland taking advantage of the US?
Of course they are. I can't.
These remarks not only offend Ireland, but also damage the strategic relationship between the US and its allies. Think about it. Can a country that was once a close friend now become a target of attack? Economists argue that destroying relationships with allies will only further hurt the US economy. When allies no longer trust the US, the trade war will become an invisible trap, driving the economy into a deeper downturn. And if you think things are already tense, Trump shocks everyone with his comments about everything being transsexual, while society is fighting for the rights of vulnerable groups. These remarks are not only disrespectful, but also meaningless. Politicians and the public have started asking, are these statements a sign of loss of control, or just another way for him to create chaos? These declarations not only harm social rights, but also fuel division in American society. Even within the Republican Party, Trump has started facing subtle opposition. Major CEOs who once supported him are now growing concerned about his wrong decisions. They're afraid to speak up, fearing retaliation from the White House. This reveals a troubling reality. When leaders can't even persuade their closest supporters, it means the government is losing control. Economists warn that this silence is not consent, but apprehension, and it could drive the economy deeper into recession. With every mistake he makes, Trump is deepening the current economic crisis, the relentless trade wars, the unchecked comments on social politics. All of it is pushing the US to a critical crossroads. Analysts predict that if this situation continues, the US economy could plunge into a deep recession. Unemployment rising, businesses going bankrupt, and the stock market showing no signs of recovery. Are these policies the road to collapse, or will we witness a big change in the future? And what's even more concerning is the silence from the Republican Party. Politicians who once stood behind Trump are now turning a blind eye, refusing to oppose him even though they know his decisions will lead to a disaster for the economy and the nation. This hesitation reflects a serious issue. When leadership can't face the truth, when politicians won't stand up to defend the national interest, who will take responsibility for this crisis? Don't leave just yet, because the upcoming information will reveal the real consequences of these policies and answer whether the US economy can recover. Tariffs were meant to be a shield protecting the US economy, but instead of creating an advantage, they have triggered a financial earthquake. In just one day, $4 trillion vanished from the US stock market. Businesses are struggling, investors are panicking. But what exactly caused this disaster? The trade war hasn't just impacted production. It has ignited a crisis on Wall Street. Major tech giants Apple, Nvidia, and Tesla, all heavily reliant on global supply chains, became the first casualties of the sell-off. Nasdaq, the index representing the tech sector, plunged 4%, one of the sharpest declines of the year. Apple, with a market cap exceeding $2.7 trillion, saw its stock drop 6.3%, erasing over $160 billion in value in a single trading session. Nvidia, the leading AI chip producer, lost 7.8%, wiping out nearly $180 billion in market capitalization. But the hardest hit was Tesla, whose stock plummeted 9.2%, slashing $125 billion from its valuation in just one day. The sell-off didn't stop there. Microsoft, Meta, and Google also saw losses between 5 to 7%, wiping out another $350 billion in market value combined. Analysts warned that if the situation worsened, this could lead to a tech bear market, where values keep declining for months. The collapse of the tech sector rippled across the market, triggering a chain reaction of investor panic. Beyond tech, the airline industry and hedge funds were also caught in the storm. Delta Airlines, one of America's largest carriers, announced a 50% cut in profit forecasts due to rising fuel costs from Canadian tariffs. Instantly, Delta's stock plummeted 14%. Marking its worst drop in 5 years. American Airlines and United Airlines also took heavy hits, with stock prices tumbling 11.2% and 9.8%, respectively. The prolonged uncertainty led to a mass exodus from hedge funds. Major investment firms like BlackRock, Vanguard, and Citadel engaged in a massive sell-off, liquidating stocks at the fastest pace in 2 years. A staggering $240 billion was pulled out of the market in a single day, amplifying the Wall Street sell-off. This triggered a domino effect across the financial system, as investors rapidly lost confidence in the administration's economic policies. The collapse extended beyond tech and airlines, shaking the entire U.S. financial system. Major banks like J.P. Morgan Chase, Goldman Sachs, and Bank of America each saw declines exceeding 5%, driven by fears of an impending recession. The S&P 500 dropped 5.7%, marking its largest single-day loss since the 2020 pandemic. The retail sector, already under pressure from rising costs, was hit hard by tariff-induced inflation. Walmart lost 12% in value, wiping out $56 billion in market capitalization. Amazon fell 9% as consumers tightened spending amid growing recession fears. Even cryptocurrency markets, often considered a safe haven, weren't spared. Bitcoin dropped 5%, sinking to $42,000 as investors pulled out of risky assets. The entire crypto market saw over $200 billion erased in just 24 hours. The bond market also sent alarming signals. The 10-year U.S. Treasury yield fell to 4.22%, signaling that investors were fleeing stocks for safer assets. A classic sign of an approaching recession. This wasn't just a short-term market shock. It was a full-scale confidence crisis threatening the stability of the U.S. economy. A single, flawed trade policy, and $4 trillion vanished from the U.S. stock market overnight. America's economy is now fighting it.